we good? Let's see. It looks good to me. Should be good. What up, Citadel? Citadel's my favorite. They're about to pay me on Monday. Ashley, I don't think that would work just because, I mean, basically the way the last super stonk was stated, they made it sound like one share basically creates an infinity volume of shares. So if there's even one share on the float, if institutional ownership owns 10 million shares, then they can re-short those 10 million shares over and over and over. So regardless how many shares are on the actual market, like as long as they own some shares, there's an infinite number of shares, in my opinion. Based off what the last guy on the r/superstonk said, like, there is no limit. I think the only thing that we found is that there is a bottom that they can short it to, and there is a trampoline bounce, and they can suppress the trampoline bounce. And if they suppress the trampoline bounce 3 times in a row, we get one good trampoline bounce. And that's why I think I'm making $1 million on Monday, but I want to show you guys the math. Citadel says, I'm trolling Citadel. Don't mind me. I'm an ape. What are your thoughts on Lou vs. Wall Street? My thoughts on Lou vs. Wall Street is he's the only guy out there that's got the same opinion as I do and not afraid to tell you guys the truth. I might get a little bit more angry. He might got 20 years of emotional maturity on me, and so he can call you guys a bunch of retards and you still love him for it, and I call you retards and you hate me for it. Like, I could see that. That's fine. But, like, basically, when I watch Lou's videos, it's like, fuck, is this guy just watching me and repeating my shit? Like, I mean, I feel that with Trey, too, sometimes. Like, it just feels like a lot of people didn't say anything about a certain topic until I brought something up and I showed how simple it really is. Maybe I'm wrong. Maybe I'm right. But, I mean, Lou seems to actually know something. So, I don't know. I feel like me and Lou are feathers of the same bird, I guess you could call it. There is absolutely no DTC rule that's going to help us. DTC is a for-profit company, and they profit when we lose. So anyone that thinks the DTC is going to make a rule that's going to help you, you are wrong, I promise. Holy moly. All right, guys, I'm going to show you some math right now. Okay. This is going to be all by hand, so it's going to take me probably 30 minutes. But not that long, but you guys will see. So we're going to do Mondays. We're going to compare Mondays versus Tuesdays versus Wednesdays versus Thursdays versus Fridays. Okay. And then we're going to do day before close, and then we're gonna do day after open. Okay, and then I'm gonna come in here. Actually, I'm gonna come in here, Control C this, bring it all over a little bit. Okay, then Control C, Control V, V. Okay, get rid of this guy. Okay, then this is going to be a Tuesday, a Wednesday, a Thursday, Okay, and then day after open. Okay, alrighty. Let's do it to it then. We should be good. So, what I'm going to do is I'm going to come in here. Now, the one thing that I want to tell you guys is, oh, hold on. Okay, so DBC day after open, so day before close, or no, we'll say price at close, price at close, price high next day, then we'll say change in percent. Okay, so we'll do PAC, PHND, and CI percent. There we go. Control C, Control V, Control V, Control V, Control V. Alrighty. Now, the one thing I want to tell you is that sometimes there's holidays. If there's a holiday, I'm just going to like remove a Thursday or Wednesday. Basically what I mean by that is Monday will always be the first day of the week of the open. So if Monday's a holiday, I'm going to put the Tuesday in the Monday bucket. If Friday's a holiday, I'm going to put the Thursday in the Friday bucket. So Wednesday and Thursday data may be slightly skewed, but it fits the closer pattern of what I'm trying to attempt because it's all about the option expiration day. And so Thursday would have that option expiration day. So that Thursday would be the lowest expected price of the week. So let me go ahead and show you this. So we're going to bring this guy down here. If AMC hits $40 this week, your 2023 $40 option should be worth about $35 to close to $40 on the ask price. Ask and bid should be close, so 35 and 33 or some crap. Times that by 100, of course. All right, if we go to the AMC historical stock price, I am not looking for charts. I am looking for numbers. And these are the numbers that I am looking for. And so I'm not going to count. I'm counting after the January squeeze. So we will start with February 1st is a Monday. So we're going to start with this beautiful day right here. Okay? So we'll actually start with January 29th because this was a Friday, right? Okay, so on a Friday, we're going to do, oops, it's Thursday. So okay, so the price at close of the Friday is 1326. The high of the next day of the Monday okay, so I gotta change this. Hold on, guys. Like, this is the first time I've done this. I was thinking about it all weekend, and now I'm actually doing it. And so what I realized is that this is gonna be Friday, Monday, and then this is going to be Monday, Tuesday. This is going to be Tuesday, Wednesday, Thursday, Friday. Does that make sense, people? So I'm going to bring this guy back. We're going to say 1326. All right, now we're on the right track. Now I'm feeling good about it. Okay, so. Oops. Alrighty. So on this guy, on Monday, the high was 1725. Making the change in interest percent would be the new price minus the old price divided by the old price. And we get 30%. So if you bought in at Monday or Friday at the low, so if you're trading Friday and you were looking for a low and you saw this 1160 and you're like, boom, I'm gonna hit that 1160, or you got to $12, something close to that, the very next day you had a 30% ROI. So like that example where I was in that like annual options that were making 100% ROI, I could have played that on January 29th, and on the next day made 50% ROI when it only went up 20%. The 30% probably would have got me to 70% ROI. And so these are things you guys got to consider. Let's keep going. All right, so now it's going to be Monday to Tuesday. So we're going to do the February 1st to February 2nd. So the low of this is going to be $12.91. And then the high of the next day is going to be $10.10. Making this equal the new price minus the old price divided by the old price minus 21%. Okay. Let's go to the next one. So now we're doing the second to the third. So the second PAC price at close is 780. Oh, hold on. I'm going to change something. So I'm doing price at close, not price at low. I think I did the price at the low for the Tuesday one. So this should have been 1330 because the close was 1330. Okay. That makes sense. Then the high was 1010. The open was 948. It went up to 1010 and then it crashed to $6 and then closed at 782. That makes sense. Okay. Did I do this one right though? So this one, the close was 1326 and then the high was 1725. Yes. If I would have done the low instead, then this Monday would have had a 49% gain. So instead I did the close because I'm waiting till the very close for me to start my trade. And so we're assuming we don't capture the low. So we're being conservative here. If you're playing for the low, you'll do even better. If you're playing for the low on Friday, you'll do even better. And this doesn't work on just AMC. This works on anything that the hedgies don't want to pay on. Like wherever there's a lot of retail options on and you see the Friday's about to go bust, you see a low on that Friday, like a lot of times that Monday's going to bounce. And they intentionally pushed it low because they want the Monday to bounce instead because it doesn't cost them nearly as much. So if I go Tuesday at close, we were at 1330. And then the next day high, we were at 1010. Or did I get... Okay, did I do that wrong? So Monday would have been 1330. Oh, okay, I did that wrong. So Tuesday's close was 782, it looks like. Yes, 782. And then the next day, the high was 977. There we go. This equals new price minus old price divided by old price percent. So, like, you're going to see positive days on a Friday, on a Tuesday to Wednesday, Thursday to Friday. Like, it does happen. It's just, if we're talking about, like, after we add up all these numbers, I'm going to go all the way to present day, add up all these numbers, and then I'm going to calculate the average change in percent possible from the close to the high of the next day for each Tuesday, like, day to day following. And we're going to see, like, by a wide margin, this is your best day right here. We're going to see that by a wide margin, this is your best day. I already know it. I've already looked at the numbers. I just haven't done the actual math. And so maybe I'll do the math and get an egg on my face, but I really don't think so. I was just like kind of looking at the numbers and it was all checking out, like real close. All right, so on the 977 day, we had a close of 897. And then on the high of the next day, it was 874. New price minus old price divided by old price. Okay, and then one more row to get started, and then I can start dragging down, which will make it go a little bit faster. So we were at 874 at the close on the last one, or the high of the last one. So the close of that day was 709, and the high was 827. This is all about trying to make as much money on an option as you can in one single day. And you're going to buy right before the close because you're expecting that next day to have a big day because you're looking for these types of patterns. This doesn't only just work on AMC. This can work in a lot of different places, people. All right, 709 to 827. Change in percent is going to equal new price minus old price divided by old price. 16% change in percent. 17. So that was actually a good Thursday to Friday. Let's make sure we did that right. So this would be Thursday, and the close was 709. So if you guys look at this, the close was 709. On Friday, it bounced up. This is just like what we dealt with the other day. On Friday, it bounced up to 827, and then they crashed it all the way down, and they crashed at 683. So like yesterday or Friday, yeah, yesterday they couldn't crash us down below where we started because there's too much pressure. We're on a trampoline upwards instead of downwards. Like this is after the first crash, right? So we haven't even hit a trampoline yet. And it had to come up a little bit and then they had to crash it back down. And so you can see that from close to close, my thing still checked out. But from close to high, Friday did have an opportunity. But I still think even with the Friday to high opportunity, on average, we're going to see negative percents just right off the bat. And we don't even see highs on Friday normally. That's what I'm thinking. All right, so February 8th. Let's see here. February 8th would be a Monday. So we are going to be looking for we're going to be looking for Friday's close, which was 683. 683 was Friday's close right here, and then the high was 689 on Monday, so this was not a good Monday for us. Okay. Monday to Tuesday, the close was 6.18, and the high was 5.81. That's not a good example neither. I think this whole week was bad. All right, Tuesday, the close was 550, and the high of the next day was 659. Okay. Wednesday to Thursday of the next week, 5.8 as a close, and the high the next day was 5.85. And then Friday the next week, where the high was 5.85, the low was 5.6, or the close was 5.61, and the next day the high was 5.97. Okay. So I gave you a 6% chance, or 6% high. But if you guys look at the close on this one again, the close on this one again is 2 pennies below where it started the day, the close of the day. So the close of the day before, it closed 2 pennies below that. So they're always trying to get to the lowest possible number at the end of day Friday. End of day Friday, always expect the lowest possible number. If you're betting against the hedge funds, you feel like. If you're betting with the hedge funds, maybe it'll keep going up. Maybe, like there's some Fridays where it goes way high, and that means the freaking institution money was in on it. And so you should be following it, but I don't know how to find that when that's happening yet. I'll figure it out later, but not yet. Now we're back to a Monday. So we need the Fridays first. The Friday's close was 5.59. And then the Monday's open was 6.06, or the Monday high was 6.05. The open was 6.03, which is pretty strong. That's an 8%. And then if we go Tuesday, our Monday's close was 5.65. And Tuesday was 5.62 for a high. And then it was 5.55 for a close. Oops. 5.84 for the next day high. 5.51 for the close. 5.5. Oops, sorry. 6.68 for the high. Then the 6.68 for the high is 6.55 for the close. 7.86. So this was a good Friday. If you would have bet this Friday, the Friday before expiration, you would have made, oh man, you would have made 50x on your money. With this 20% on this Friday, if you would have done Thursday at the close at 6.55, and you would have sold your options and you bet the 7.50 strike, all your money, it probably would have made 30 to 50x at least. That was a big bet right there. Whoever got paid on that bet, good for you. See, this is where I actually start buying my options. Oh, I did get paid on this bet. This is when I made my $1 million, people. I totally got paid on this bet. This is exactly when I... No. We're the week before. No. We're the week before. So I started making money here. This is where I went from 58,000 to like 75,000 right here. Or no, sorry, Monday. So, what was it? Where am I at? Because something's wrong with my graph right now. Did I mess up my numbers somewhere? I thought I was right on. Oh, I must have missed a holiday. Did I miss a holiday? Is that what happened? Hold on, let's see. Let's see what happened. So, where's Monday at? Monday, I was on the 16th. So we go Monday, Tuesday, Wednesday, Thursday. Yep, there's only 4 days. Okay. So I got to change something. So this would have been the Monday day. So that's why that Monday is good, because it's a Monday day. And then this needs to come over here to a Friday. And we're just going to not give Thursday. Thursday gets no data for this one because it was an expiration Thursday. So it's actually a Friday. Okay, so let's make sure that's right. So this would be the... Thursday to Friday would be right here, and we got 5.51 as the close to 5.77 is the high. So I read that wrong. I totally read that wrong. It was only 5.77. Okay, so 5%. So this was not a Friday to make money. I read that wrong. My apologies. But instead, we closed at 5.51, and it went 20 cents higher. So this is actually more like what we went through on Friday, because we went to a high for the next day. We went up 10%. In this case, 5%. And then they crashed us down, and we went actually just a little bit above where we were the day before. And so the next day, we closed at 5.70, and it goes up to 6.68, and that is our Monday. So 5.7668. And voila, 17%. That's a big Monday. If you're betting on the next Friday to expire like I was getting paid on this Monday. And then GodPill, how can I help you?
Hey, sorry, I'm following your math, and I forget how much money you started with. So I was wondering, like, how much did you put into this contract initially?
Are you talking about the stuff that I think is going to make $1 million on Monday? Or are you talking
Yeah, the
about the
math you're
stuff
doing right now.
back in February? None of this stuff is
Back in no, back in February. Sorry.
Okay. I mean, the stuff back in February, like, I can't even remember all of it. You just got to go look at the video back in February 20. Look at the video I posted on February 24th. It's a 5-minute video. It shows my entire portfolio that I had. But basically, the percent ROI that I'm showing is not what I got. It's the between the stock prices. Like, I'm not showing my profits. I'm showing the stock price movement.
Oh, okay, I got you.
So
okay,
just stick around, follow
so
around.
wrong.
I'm going to summarize it after I do all the math. But if you stick around, it'll make sense in a minute. Just hang out for a second.
Okay.
All right. Bye. All right. So we went to 668 on the Monday. Now our close was 655. And then the high for February 23rd was 786. Okay, and then what's going on here? Okay, that makes sense. Monday, Tuesday to Wednesday. So Tuesday's close, which would have been the 23rd, was 770. And Wednesday's high, which is the day I started getting really paid, was 9.83. Okay. Wednesday's close was 909. Thursday's high was 11. That's a pretty good day to bet on. And then Thursday's close was 829, so got super crushed by the end of the day Thursday. And Friday's high was 901, so it went up a little bit for a high, but then look at the close. It dropped down for a close at 801, so it actually lost 28 cents on the day. So even though this is going to show positive, we know that Friday, most of these ended up as a close on as a negative on Friday. So Friday just goes negative almost 90% of the time, it's looking like. Compared to its open price or close price of the day before. All right, so if we go to March 26th and 21st or March 1st now, we're going to do the Friday to Monday. So we got dropped down to 801 at the close. And the Monday high the next day was 945. That would have been a great bet to capitalize on. 18%, not too shabby. At the 945 high, we closed at 918. And then the next day we went up as high as 940. Okay. The next day, that day we closed at 893 and went to a high of 914. Because you guys remember, every day options are getting cheaper and cheaper for that Friday to expiration. So if these are crazy high numbers, then anyone that bought an option the day before is going to make buku dollars. And so they don't want to see that. The Wednesday to Thursday, if we got 914 as the close on the last, 914 was the high on the last one. So the close of that day was 858. And the high of the next day was 859. So Wednesday to Thursday was not a good bet to buy an option. And then Thursday to Friday, we're looking at a close of 803 on Thursday and a high of 827 on the Friday. giving us a 3% return, but by the end of the day, it closed at 8.05 for basically a break even, back to the $8 mark. And if we keep going, Friday we closed at 8.05, and on Monday we hit a high of 9.48. Surprise, surprise. Oh, did I get that? Nope, these are different numbers. Look at this, guys. The last two Fridays to Mondays completely represent each other. 8.01 to 8.05, 9.45 to 9.48. Literally identical. Literally identical bottoms and identical highs of the next day. That is so gross. That is so scientific proof of fucking market manipulations and the hedges just bouncing us off of trampolines. It's so fucking sick. Monday, Tuesday. So at the 9.48, we closed that day at 9.29. Then we went to a high of 10.77. So this was a great day to buy in on a Monday and then cash in on a Tuesday. That was one time where it actually made a lot of sense to do it. It happened this time too over here, right? So it does happen. So this is actually a double trampoline, right? Because this one, it went 18%, and then they were able to suppress it right here. This one, the time before, was a double trampoline. This one right here, a double trampoline. You see that? Monday, Tuesday followed it, where this one was Tuesday, boom, then flat, and the whole week was flat that week. So this trampoline was a fake trampoline, and these ones were real ones that followed by extra trampoline bounces. Okay, so let's keep going. So we're at 10.77 was the high of that day, so the close of that day was 10.50. And then the high of the next day was 12.47. So again, this was a real trampoline bounce. This was that $14 one. This is the trampoline bounce I feel like we're about to mimic right now. So beautiful. It's already looking gorgeous. I'm going to keep it on the same track for the Wednesday, Thursday from here on out, so we can make sure that we're comparing apples to apples when I compare this week to the week that we're on right now, or the week that we're headed into. But basically, if I go here, so the last was 12.47. On that day, we closed at 9.85, and then we opened at 10.87. So this was a great opportunity right here to actually make money. Oh, sorry, hold on. I was thinking that was Friday. So that was a good opportunity, though. On a Wednesday to Thursday, this 10%, you would have made a fortune betting on the Friday $10 strikes. Like, you would have made 20x on your money, probably. And then right here, no, you probably would have made 10x on your money, but it would probably would have been 10-cent option contracts you're buying, maybe 20-cent option contracts you're buying, and then you get $1.50 in the money when you sell. So you get about 10x, 15x on your money. So if it was 10.87 was the high, the close was 10.28. And then on that one, so another opportunity to make a lot of money on a Friday. That's a good Friday to make money. So we went a high for, so we hit the 11.40 right there. And then, but if you look at the close, it's 11.16. Oh, so this was the one Friday that you're going to find probably where it actually closed at a profit. This was one Friday where there was nothing they could do about it. And it's because we were bouncing up 10% every single day of the week. Look at this, people. It went 18%, 16%, 19%, 10%, 11% were the close of the last day to the high of the next day. And so it didn't always maintain the percentage, but every day was a double. We saw at least a double-digit growth for at least a second. How sick is that? We went from 8.31 as the, or 9.29 as the Monday close, all the way to a Friday close of 11.16. Like, everyone made bank. Like, the hedgies got fooked right here. They got fooked. But then looks what happens the next week. So, Friday to Monday, guess what? We're on another trampoline bounce. Well, guess what? I think our week, this week, we didn't get 10% every day, but we got a 30% day and then a 10% again, and they pulled it back. And so I think that they stalled out the trampoline bounce. It popped up on Thursday. Friday, it should have popped up more. They screwed us. And now this next week, we're about to see an amplified version of the week I'm about to calculate right now. So The week we just went through is the week that I think that was comparable to this one, and the week I'm about to calculate right now is the week that I think is coming on Monday. So how did this Monday go? Let's find out. Let's find out. The 12th, we closed at 11:16. What was the high of the next day? 1449, baby. That is what I'm looking for tomorrow. And when I hit this on Monday, so not tomorrow, but when I hit this on Monday, I expect to make $1 million. That's how I'm making my $1 million, because I'm expecting 30 to 100% on Monday. I think I need closer to 50 to 70% to make $1 million, but like, yeah, I'll take 30% and make 300 grand. Let's go. I'll take 30% and make 300 grand. Let's go. Whew. So, this is exciting. This is what I'm looking for right here. So, on Monday, it closed at 1404. Now, again, because it bounced up, they were able to suppress it, and they kept going. Like, this week became a volatile week. So, for example, if Monday goes up to $20, expect Tuesday to crash to 12, and then Wednesday to go back to 20. And then it might start to squeeze. I don't fucking know. But, like, let's see what happened this week to get an idea, okay? So we went from 1404, and the high of the next day was 1362. GodPill. How can I help you?
What crack are you smoking, bro?
Shut up. This makes perfect sense. If you guys don't understand this, you're mentally handicapped. You guys are pathetic to say what crack am I smoking when I'm giving you the best research you've ever seen in your fucking life. If you don't agree with that, you're mentally handicapped. Like, go see somebody. You need help, not me. Alright, so 1302 was the... Oh, no, hold on. 1362 was the high, so 1302 was the close. And then the high of the next day was 1366. Okay. 1366 went to 1356 as the close. And the next day was 1454. So you guys see they were suppressing it early in the week. So Monday they let go huge. Tuesday they suppressed. Wednesday they can't suppress anymore. And so they got to let it go up again just so that they can suppress on Friday. So if we look at the Thursday, it ended up closing at 14 and then ends up going to a high of 14.18. So nobody makes money on Friday. How sad. Everyone thought they were getting paid on Friday. But instead, anyone that bought options on Thursday went broke. GodPill, how can I help you?
Hey, just wanted to ask, you're awesome, dude.
Thank you.
How many shares would you say you would have to have in order to make $1 million, or just make like 100,000?
Shares or options?
Shares.
And you're talking about Monday, or are you talking about in general, like during a squeeze?
Yeah, Monday or during the squeeze or anytime during the week, because I forgot that I had 30 shares
Nice.
on back in January, and because I've been focusing so much on Dogecoin.
Okay.
So I'm like, okay, I can get up to 100 shares.
Oh.
Would that be enough?
So 100 shares would be enough during a squeeze. Like, if a squeeze happens, AMC is going to a minimum of $1,000. I don't think it could go lower than $1,000 if a squeeze happens. But the thing is, if you're watching my thing, right now I'm going over stock prices, but then I'm going to translate it into option pricing. And basically, I only trade options. I don't trade stock. And so on Monday, if Monday goes up 100%, if it goes from $12 to $25, I will make $3 million probably. And I bet $20,000.
Oh.
I bet $20,000 to make $3 million on Monday if it goes up 70%.
Okay, that's awesome. Okay.
Yeah. So if you just keep watching, I'll get into that towards the end of it.
All right, thanks, GodPill.
Yep, you're welcome, man. Alrighty, so we're at $4 and $4.18. That was the Friday that everyone thought they were getting paid. Everyone thought that was the squeeze day. It did not happen. That's okay. We will live to fight another day. Now we are at... Uh-oh. 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 Echo. Echo. What just happened? My math is off somewhere. It looks like I got off somewhere. Oh, here we go. Okay. 14. Okay, there we are. There we are. We're good. Perfect. All right. So now the close was $13.93 on the Friday. Of course, they had to get it below that $14 mark. They always do. And then on Monday we go to, and then this is just a total collapse, right? So this whole week is just going to be them draining the price again. They let it inflate a little bit. Now they can drain it again. So basically, I'm looking for like $20, $25 on AMC next week, and then like I expect them to drain it again. If we squeeze, I've got my squeeze bucket, and I'm not closing that squeeze bucket until it hits 1,000 or maybe even $1 million a share. Like, I don't care. But the rest of my money, like, I'm trying to cash out for millions of dollars as soon as AMC hits $25 or whatever. So if we look at the Monday high of the next day, it went to $13.19. So it was just a bloody, bloody day on this one. Our best case scenario was negative 5%, but by the end of the day, we closed at $12.49. So we were actually down negative 10% on that Monday. And the next day, we drop again to 11. The high was $11.93 of the day after, making us lose another 4%. And then it closed on that day at $10.66, which is actually another 10%. So it was down 10%, down 10%, 2 days in a row after hitting $14. And then we got 11.21 of the high the next day. And so the only thing you guys got to understand is like, well, if they can crush it that low after hitting $14, why is GodPill so bullish if we just hit $14 on Friday? The reason I'm so bullish is because that $14 is not an equal $14 to this $14. If you look, we started at $7.50 to get to this $14. So when we started this journey started at $9 at the minimum. That means $18 is where we're headed, if the math works out proportionally like it has been on a lot of these different bullcrap days. And so the way I'm seeing it is we getting paid. And then once it hits $18, $19, $20, maybe $25, maybe $40, like who knows what the real number is going to end up being with all this volume coming in. But it's going to, after it does, it's going back down, people, unless it initiates the squeeze. Unless the squeeze is initiated, in that case, it's only going up a lot. Like, if it breaks 100, I'll believe we're in a squeeze. If it breaks 50, I'm gonna say we're in the squeeze, and I'm not I'm gonna try to hold on whatever I got left until we hit 1,000 or whatever. Okay, maybe I'll do like 25% of my account day trading, so I can still try to make money every day. But the majority of my money, I just want to wait till 1,000. If it breaks 50, that's where my mindset will switch. Okay. But before 50, I'm cashing out my $40 strikes. I'm pushing it into the stock. I'm doing all that good stuff. If they add more strike options, I might go buy more options, depending. I just got to see what happens. I don't know what I'm going to do until I do it. Let's see here. Okay, so that was 1066 was the close. So the 1121 was okay. So we are right here. Wednesday to Thursday, we had a close of 902. So, I mean, yeah, AMC just got wrecked this week. Holy moly. And there's a high of 1132. This was a payday. This was the ultimate payday right there. That's if you would have bet on the 1150 strike when it was at $9 close the day before on Wednesday, you would have made 50 to 100x in your money. 50 to 100x in literally 1 hour. From the time that 10 minutes before market close, you buy in, market opens the next day, it goes to its high, you close out. Right before it drops. Holy shit, that's amazing. There have been some big, big opportunities for AMC. If you've been playing a little bit of money every single day, there have been some big, big opportunities. And then if we go Thursday to Friday, we closed at 1094 when we went to the high of 1132. And on Friday, of course, we go up to 1153. But if you look at the close, look at this. So it went to 1153 as the high, which is right here on a Friday. But if you look at the close, it closed at 1024 where the close before was 1094. So it actually dropped 70 cents on the day, even though it went up 5% to start the day. So you guys got to understand, they bull trap us almost every Friday. They bull trap us almost every Friday. Okay? You guys seeing that? If you see Friday open at a high and it keeps going up in the morning, freaking buy puts, people. Buy puts. Not a lot of puts. Like, don't short it to where you're going to lose money. But, like, look at this shit. The math is repeating itself over and over and over. Holy shit. All right, we're in April now, people, so we're getting closer. All right, so the close of Friday was 1024. And the next Monday was a high of 1076. Nothing special. Then that day closed at 1035. The next day went to a high of 1052. Nothing special. The next day went to, or that day we closed at 1035. The next day, oh, no, that was the one I just did. Oh, yeah, we closed at 1035 twice in a row. The next day we went to 1047. So just basically a repeat day. That day we closed at 1021. And then the next day we had a 1026 as a high. That day we closed at 936, so we got totally wrecked by like 10%. And we opened... Ooh, oh, hold on. It looks like we might have had another 4-day weekend. Yep, we only had a 4-day week. So I'm going to take away... I'm going to move this guy over to Friday. Control C. Control V. And then I'm just... This does not get a Thursday data. No Thursday involved. Okay. Okay. Then we got here. And we closed at 1024. Oh, already did that one. So we closed at 936. And then on Monday, we opened at 1125. And it looks like it might even, or the high, not open, but the high was 1125. So this Monday was definitely a Monday to get paid. Big payday Monday right there. These are when I was holding my stupid $40 strikes. And the trampoline bounces kept coming. And I wasn't playing them. That's okay. I'm in it to win it now. Let's see. 1, 2, 3, 4, 5. Okay, we're good. Okay, so that's April 5th. Then on that day we closed at 1061. 1061. And we went to a high of 1050 the next day. So basically, after that 20% jump, they were able to suppress us. That 20% is all the pressure they had to relieve in order to suppress us. 1060, 1050. Okay, so that day we closed at 1020. So they actually suppressed us pretty good, like 5%. And then the next day we go to a high of 1018. So they suppress us again. And on that day we close at 985. And then the next day we go to 1001, so very, very little gains. And then on the 1001, we closed at 979. And on this Friday, they decided to give us nothing. So this Friday, they opened down 1% and then just crushed us another 2 or 3%. So this Friday, there was absolutely no hope, and they destroyed the 950 strikes. Like, the 950 strikes thought they were getting paid. They did not get paid. They thought they were going to be able to exercise. They did not get to exercise. All right, so on that Friday where they did that, it closed at 942. And the high of the next Monday was 949, which is not that great. And then that Monday it closed at 862. And then the high of the next day was 912. Okay. Then that Thursday, so 912. So the close was 884 of that Tuesday. Oops. And that high of the next day was 981. That was a payday right there, people. If you bet on that Tuesday, that Wednesday, you got paid. That was probably a 10 to 20x. Wednesday to Thursday, so the 981 of the high was a 935 of the close, which led to another payday on a Thursday. Another Thursday. So this was a Wednesday and Thursday payday. Had you taken all your investment and profits and reloaded it one more time, another 10% would have been fucking huge for you. Okay, so then that's April 15th. So now we're on April 16th. Okay, the close on April 15th was 990. And for this Friday, the high was 1003. So there was nothing there on Friday, and it ended up closing at 933. So you actually lost 6%. And the 950s did not get paid again. So we're at 933 here, which makes the high for the next day 981. A little bit of a gain, but nothing too special right there. That 981, we closed at 978, which is basically our high, and then 1065. So that's another. So if you would have done like a 2 day in a row, you definitely got paid. Then on that day, we closed at 999 and went to a high of 1038. So we got 4% right there, and then we went from a close on the 1038 of 1016 to a high of 1196. Ooh, that's a big day right there. That's a Wednesday to Thursday. Oof. That's an 18%. That's a 30, 40, 50x right there on your money, people. If you would have bet Wednesday with 2 days to expire, you would have made 30 to 50x on your money if you closed at 1196 from the time that you bought and you played the $12 strike. The $12 strike would have paid more than any other strike at 1196, and you would have made so much money. Cash them out when you get to at the money or close to, people. That's when you got all the profits you need. You got the maximum of the potential of profits. The rest of the profits you make are closer to the line of stock than it is of the exponential growth you were experiencing. Your exponential growth dissipates as you gain your profits. And so you either roll them out to further options, further strike dates, or further strikes and expiration dates, or you just freaking cash them out, or you freaking cash them out and buy stock. Alright, so on the 1196 day, we closed at 1150. We went to a high of 1222. So that was actually, you could make some money on that 6% pop right there, but then it closed at 1150. No, yeah, closed at 1146. So by the end of the day, you would have lost everything. So 1146. And then we went to a high of 1139 on Monday, so Monday was not a good day this time. Then on that, we closed at 1085, and then we went to 1104 was a high the next day, so nothing. And then we went to 1020 and 1018 as a high the next day, so nothing. So this is just people buying options and getting wrecked, people. Getting wrecked on theta. And we went to a high of 1012, just getting wrecked on theta. Nobody's making money this week. Holy cow. 1012 goes to 971. 971 went to a high of 975. So just totally wrecked. That was the worst imaginable week for options. If you were buying calls or puts, you got wrecked. Riggedy wrecked. Uh-oh. It looks like I might have effed up one more time. Crap. Let's see here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay. So my Friday to Monday. Like, what's my Monday? My Monday is a high of 949 right there on the 12th. Okay, so what about the next Monday? My high was 981. I got that right. Okay, what about my next Monday? My next Monday was 1196. I got that one wrong. So April 26th was 1196. How did I get that wrong? Okay. So if that was the 1196, then it closed at 1150 instead. And if that closed at 1150, then the high for that was 1222. Looks like I started repeating some bad data or something. My bad, guys. Yeah, that was weird. Okay. So now we're on a Tuesday close. Oh, 1222 was 1146. And the high of the next day, of the Wednesday, was 1139. Okay, and then that 1139 closed at 1085. And the high was 1104. Then that 1104 went to a close of 1020. Went to a high of 1018, which went to a close of 1003. Okay, we're back on track. All right, 1003 on a Friday. That Monday we opened up to a high of 1012, but we closed at 971. Went to a high of the next Tuesday at 975. Tuesday we closed at 939, but Wednesday we got a high of 941. So this looks like another just bad data week. 941 was the high, making the close 917, making the high 94. Just a bad week. Of that 94 on a Thursday, we closed at 9 even. And of that 9 even, we went to a high of 979. So you could have made a little bit of money on an option right there. If you would have done the 950 strike, you probably would have made 5x on your money. 3 to 5x on your money with this little 10% pop. Maybe even 10x, honestly. 10% is a pretty big bounce. Okay, and then on Friday, we closed at 951. So if you held till Friday, you got Jude. Held till the end of the day. 950 strikes got Jude. So 951 was the close, and the high went to, where are we at here? 951 was the close. The high went to 1015. Okay. The 1015 had a 974 close and went to a high of 1048. Okay. 1032 close, went to a high of 1063. Okay. Then the 1032 close. Oh no, oops. Hold on. This is a 1005 close, my bad. 1005 close went to 1063. Then the 1032 close went to 1420. 38%, baby. That was a big day. Then it closed at 1277 and went to a high again of 1434. Man, another big day. Had I played just for 10%, I would have made a fortune, but I thought I could have squeezed, so I played for a squeeze. But if we compare the last time, the week before, remember, look at this, guys. So this week right here is the week before we hit $14 from a bottom of 7. All right, we got all the data now, so I don't need to be on that data screen anymore. So this right here was the week before that we started at 805. We went as low as like $7 as in these days, and every day was just like, we didn't close this high every day, but every day just was showing that it could not really go down. And we were so bullish, and we knew it was going to go up. And look what happened the next week. We hit 1404 in 2 days. Well, guess what? This yellow week of the build-up process is equivalent to this week right here. And so in this week, we built up to 1250 to go hit 1454. So this time, we built up to 1434 to go hit what next week? You tell me, people. I think it's $25. It's $18, $25, or $40. If it doesn't squeeze. If it squeezes, it goes to 1,000. Come on, people. Who's with me? Who sees this? Who loves this information? All right, I'm going to catch up on the chat. GodPill, how can I help you?
Hey, GodPill, it's Gary.
What up, Gary?
Hey, one other thing I wanted to just point out to you, because your analysis is right on, because I was tracking this in February. I've been in this stock the same time as you.
Yep.
I've seen these patterns. But one other thing to look at, which is following the same thing but on a chart like in TradingView, is if you go and look at the stochastic, when the red line crosses over the black line, every time it's put it in a position to buy the puts, it follows exactly the data you're saying with the stochastic.
Okay.
So that's another. It's so just another
you're
indicator.
You're saying the stochastic is saying that next week is a booming week for us?
If you look at the pattern that it's in now, and you track it back to February when we had those booms, yes, 100%.
Nice. Well, it looks like all stars are aligning. I mean, you saw me, right? I bet the farm. I'm expecting to make $1 million on Monday. I'm not exaggerating when I say that. Like,
I think your analysis is spot on. It's going from 14 to
18 or something.
Low
right?
end 17, 20,
yeah, 17,
maybe
18.
25. And
I'm
if
okay
it
with
breaks
that.
through,
$18 and I make $1
sweet.
million. So if it hits 18, I make $1 million this week. So I got my fingers crossed, brother.
Yeah. All I'm saying is anybody that's paying attention and the data you're sharing out there, the patterns are there because we know they manipulate the shit
right.
out
And
of
nobody
stuff.
can deny my trampoline patterns, right? I've called trampolines like 5 times in a row, and every time the trampoline hit, like the trampoline's legit. Anyone trying to argue a trampoline technical analysis on the diamond hammers from GME and AMC?
And even when the hedgies are pushing it down,
right?
It's still trampolining. It's just pushing it down.
Exactly.
Like when it went from 14 all the way back down to 8, and now we're on a bullish pattern up again. It's still trampolining as we go up.
Right, but we've trampolined in between that time where we went from 14 to 8 all the way to now. We've trampolined 10 different times where it's like 20% in a day because they dropped us so low, you know?
Exactly. And that's why your data is spot on, because it's manipulated. And
so the difference between this trampoline bounce and the other ones is like when we look at the last $14 trampoline bounce back in March, it was a buildup of 3 suppressed trampoline bounces, and then the 4th one just punches through. And that's exactly what I'm seeing right now.
Well, exactly. And if you look at the full stochastic, so I've not put a lot of money in this when it's been going down because my account was draining.
For sure.
But last week I refunded my account as well with $20K.
Nice.
For the same reason as you, because the data supports that this is in an extreme bullish pattern.
I know, and even when I lose money, I can't turn down a good bet, you know?
Spot on. And the other data, the stochastics and the other data out there support what you're saying. So again, I'll say it, guys. If you guys think GodPill doesn't know what he's talking about, you guys are stupid. He gets it.
Hell yeah.
All right.
Thanks for the call, Gary.
Bye.
Bye. That's what we talking about. I'll show you guys the position real quick. I'll show you guys the position real quick. Hang on. All you gotta do is watch Friday's live stream to see how I ended my, like, watch the last 5 minutes of the market yesterday, and you'll see exactly what my portfolio is. So I actually am not going to show you because I'd rather you take a little effort on your own and go do that. Just look at the clock down here. The market closes for me at 1 p.m. And so just look for when it's 12:55 p.m. and you'll see me making my final trades, and you can see what my entire account looks like. Davin Wizard says he loved this information. Thank you. Sir Dojala in the house. Guys, do me a favor, like the video. It's been 3 weeks of nightmares where I've just been getting 70 down likes for every 20 up likes I get. So the last 2 days have actually been positive, where I'm getting like 60 up likes and 40 down likes. And so if you guys could like the video and show that you appreciate the information I share with the world, I would appreciate you. Not bored enough. I got no idea how many shares it takes to ladder attack our prices. I just think that, like, they were desperation and it was a last chance on Friday, and now Monday we get paid. Mondays are scientifically, mathematically our paydays. Mondays are mathematically our paydays. Not always, but mathematically usually. And I got a good feeling about this. This Monday's Millionaire Monday. We go back to millionaire status. I mean, not me. It's going to be my brother's money, but I'm sure he's going to give me a fat stack to trade with. If I get $200,000 to trade with, I'll turn that into $1 million in the next 30 days, so I don't really care. It might take me 90 days, but I'm okay either way. If he gets $1 million and I get $200,000 to start trading, I'll be a happy, happy, happy man. Happy, happy, happy man. I can open up my portfolio margin account, and shit's going to get wild, people. If I get to open up my portfolio margin account with a $200,000 account, shit's going to get wild. Oh, man. Damn, you guys need to be calm. Ashley will boot people for telling her she's a shill. She ain't no shill. That's a fact. And you guys think I'm going to get mad at Ashley for booting you for talking shit to her? You wrong about that one. If somebody's... Alright. These people calling Ashley a bitch got to go. That shit ain't going to fly for me. That shit ain't going to fly for me. You guys can't show respect for me or my mods. Y'all pathetic. I like when people get crazy in the chat. Blow my chat up, people. As long as you're not being retarded. As long as you're not talking shit. Jason Strong, I got a wisdom tooth extracted, so you don't even replace those. I don't need a gold tooth. Is a wisdom tooth, so I'm totally fine. Like they said, they said my roots were really good and it wasn't compacted or nothing, and it came right out. Like, it was literally, I went into the door and I was out within 30 minutes, and by the time the numbing went away at like 10 o'clock last night, there's not one throb since. I feel so good. I'm so glad I got it done. Like, it was amazing how quickly my girl got it all scheduled and stuff. I'm so grateful that it's all done. guys, there's no answer for what to do on Monday until Monday happens. So my only answer to you guys about what to do on Monday is buy stock or watch GodPill. But basically, if it opens at $14, you probably want to buy a $20 strike. If it opens at $10, you probably want to buy a $15 strike. Like, it all depends on what it does, man. What it do? All right, guys. Well, the last thing I think I'm going to do, let's go over the math one more time. And let's just do this. Oops. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. All right, guys, the average return on a Monday is 11%. On a Tuesday is 2%. On a Wednesday is 9%. On a Thursday, 10%. Oops. And on a Friday, 7%. So mathematically, I had just proven to you Monday's our greatest day. We make the most money on Monday. Half of the time, they can take our great 20%, 30%, 20%, 20%, 20%, and they can smash it down on a Tuesday. Or they can trade sideways on a Tuesday. So Tuesday, on average, hasn't done good because Monday's done so good. And then Wednesday and Thursday are pretty decent because they try to do... so basically, if I'm looking at this, I'm looking at Mondays, Wednesdays, and Thursdays. If I want to buy an option right before market close and I want to cash it out as soon as the market opens for a high in either direction, if you want to do calls and puts on like daily, like Mondays, Wednesdays, and Thursdays look like the days to do it. Tuesdays and Fridays look like busts to me. Like they're always trying to do something on their own. You can have a big day, 16% here, 11% here, 17% here. You get paid a fortune if you hit those days, but you should do way less percent on these days because they hit way less often. That's the last thing I wanted to say. If there's no more questions, then I'm probably going to take off, people. Teej Johnson, if you don't understand options, go watch my 4 videos in my playlist that says sell stocks, buy options, and then come ask me questions. And I promise you should understand options. Like, I teach you how to understand options. I don't tell you what to trade. Go watch the playlist, people. There's 4 videos, about 4 hours long. It'll change your life. It'll change how you see everything. Mathematical proof, people. Mathematical proof that Monday I am a millionaire. Look how many Mondays it's been since we had a 20% pop. And Monday's the most likely day. Look how many bad Mondays we've had in a row. Holy shit, I'm getting paid, people. The big Monday came after all the crazy weeks of every day being a good day for us. And guess what this week was? It was a good fucking week. We getting paid. We getting paid on Monday. I feel like I've been paid so much on Monday. Oh, man. I don't even need a Lambo. I'll probably get a Bentley, like a bulletproof Bentley before I get a Lambo. My girl's going to get a rose gold. Like, I'm going to get my girl, like, a rose gold bulletproof G-Wagon. Rose gold with, like, a sparkle inside of all of it. With, like, glitter inside the paint or whatever. And then I think we want to get me a truck just in case I ever need to do any real work. Oh, yeah. No, I mean, here's the thing. When I was a young kid, I tried to break into a truck one time. And I took literally, it was like a brick. Like a piece of a brick. Like a good 5-pound perfect like thing that you could just wrap up in a freaking pillowcase. And basically I was with my friend and he said this guy robbed him. and stole his pool sticks, and that we need to get his pool sticks back. I literally swung at this bulletproof window with this 5-pound brick in a freaking like pillowcase 15 times as hard as I physically could, and it wouldn't even like make a scratch. I was so blown away with this. But then they had a little window on the back part, the little part that you can slide open, and I smashed that, and it smashed real good. And then I pulled out the sticks, and we ended up giving them back because it was like right as I started my roofing company, and I was still a little crazy. And they tried to like blow it up on my roofing company thing, and we just agreed to give them back their sticks if they agreed to leave my company alone. I got some crazy stories, people. That's a light one. That's a fun one. That one I don't mind telling everyone. Oh, man. Otto the Red says, first time viewer, but I hope you hit. Thank you, man. Thank you. I think I will. But if I don't, I put half my money on this week to expire and half my money on June 18th. So even if I don't hit, I should still make at least 6 figures if it hits by June 18th. So I shouldn't be in trouble either way. Either way, I should be good. Patrick Barrera, I'm making $1 million on Monday. It's too late. You're not getting $1 million, Patrick, because you had to already bet on Friday. And if you want to make $1 million after this, you have to wait till Monday and see what I do after, because I'll definitely be making more millions, but like not with the same strategy I'm making $1 million on Monday with. You guys, if you want to see my portfolio, you just got to go watch my video on Friday. Look for, I finished my portfolio around 12:55, 12:56 p.m. on my clock down here. You can go watch and see exactly what my portfolio is if you want to. Otherwise, like, you're not a real one, and I don't really care. I only do options. I don't do shares. I don't trade shares. I only trade options. I'll be trading shares after we get to $50. Once AMC hits $50, then I'll be buying shares. But on the way up to $50, I'm trying to 1,000x my money. Patrick Barrera, if you got 500 calls on $25 calls, you're making $10 million if it hits $25 on Monday. You're making a shit ton of money, bro. Probably, maybe 5 million, but it's going to be a lot. Jason Strong, let's meet up, brother. Let's meet up. I like the idea of going watching them fight. Fights are fun. I think $50 could happen by the end of next week. But if they halt the stock, if it hits $20 and they start crashing it, I could see it crashing it back down to $12 also. So I really don't know what I think until it happens. I got to see what they're doing, to see why they're doing it, to see what their strategy is, and then I'm going to try to beat them on their strategy. I'm going to be day trading. I'm going to be buying like long-term options, short-term options. I'm going to be buying stock when my options are hitting. Like, I'm going to be doing firing at all cylinders, people. Like, as the stock market is moving, I am here and I am trading. Like, we are here to make money and nothing else. I am here to make money, and then I am here to change the world after I make the money. But right now, we need to go get that money. Right now, my brother needs some money. I need to put some money in his account. Right now, you guys need some money. Patrick Barrera, if it squeezes, I think 1,000's the minimum price, but I don't think it has to squeeze next week. I think we could hit 50 and not squeeze next week. I think they could go to 50 and all the way back down to 12. So I'm playing both sides, and I got a squeeze bucket that I don't sell unless it hits 1,000, and then I got the rest of the stuff that I cash out for millions if it hits 50. Otto the Red. If you get shit on for doing options, you just need to hang out in this channel. Because, like, if people shit on us for options, we ban them. Because the only people that shit on people for options are people that don't understand them. And so they're really just shitting on themselves. If we go above $50, I will be telling people I think we are in the squeeze. If we stay below $50, I'll be telling people I don't think we are in the squeeze. Patrick Barrera, I never exercise options, and I always... So, Patrick Barrera, I don't ever exercise options unless they're like at least 100% in the money. If they're 100% in the money, you have 95% intrinsic value, go ahead and exercise. It doesn't matter. If you want the stock, take the stock. But if you're buying stuff that's out of the money and it hits in the money, what you got to understand is that final 10% of growth on your way to 100% of growth to the $25 strike, that final 10% paid you more than the other 90% of the movement. And so if it drops from $25 to $20, you're going to lose 50% of your millions of dollars of profits, where had you cashed out and bought into stock, you would have only lost 25%. Where had you kept the options and it gone up another 100%, you would have only made another 1x on top of had you just been in stock. So if you think it's going to keep going up, you got to move your $25 strikes to the $40 strikes, or you just buy stock. But you do not exercise. You sell it, and then you come back into the retail market and you buy the stock. I got no thoughts on Ape Andy. I know Lou versus Wall Street doesn't like him. That's all I know about Ape Andy. It didn't seem like Lou liked him. Auto the red. I got 33% of my money, or 20, well, not anymore. Now I got half my money in the June 18th expiration. But before this, like if it goes back to normal, if I don't think we're in a super bounce, then I'm going to be back to normal, and only 25 to 33% of my account is waiting for a squeeze, and I never sell it. It's 2022 or 2023 options, and I'm just waiting for that to make a lot of money. The rest of my money I'm day trading with. And so I am waiting for a squeeze totally. But in the meantime, I want to be making money and adding to my squeeze bucket the whole freaking time. Every time I make profits, I put the 33% of those profits back into my squeeze bucket. And my squeeze bucket gets bigger and bigger and bigger every day. So the longer it takes to squeeze, the more I'm going to make when it squeezes. It's not about 2023 being long away, Teach Johnson. You can cash it out as soon as it makes money. It's about, if I buy $40 strikes on 2023 and it goes to $1,000 a share, basically every single option strike on the market right now will be worth almost the exact same amount. Like percentage-wise, there'll be a 90%, like there'll be 10, some options will be worth 10% more than other options, but they're all worth basically the exact same amount because they all have about 90% of the same intrinsic value. And so it just, for me, I just want guaranteed money, and 2023 is guaranteed money for a squeeze. And so why not? It doesn't make sense not to do 2023. Who cares if they're expensive? So then buy a cheaper one. Do 2022. Do September. I don't know when the squeeze is going to happen. For me, I'll make 100x of my money if the squeeze takes another 6 months. And that's not counting the super bounces. If it just does the $8 to $12 for the next 6 months, I will literally make 100 times on my money. And so I don't care what it decides to do. I hope it repeats the last 4 months. But if it squeezes, I make a ton of fucking money. Do whatever works best for you. All right, guys, I'm out of here.